on the breakout, gold's going to make a new all-time highs.
Gold-backed ETFs seen inflows of over $5 billion.
$0.8 trillion gold market.
Why are we the only guys that seem to understand this?
Makes your head spin. Hi everyone, Shane Morand here for this episode of Live from the Vault. I'm excited, I'm fired up to be going right to talk to gold with Andy Maguire.
Hey Shane, it's always great. I love these 2 weekly meetings, and not only does it give me a chance to catch up with you as a long friend, but also, I know you've got a pulse on things from many different perspectives, and I think the good thing is I'm on the wholesale side. You're a long-time investor, understands the value of gold, silver, and it's nice to sort of bring these two sides together.
Awesome. Well, I've had so many conversations in the last 2 weeks since our last call. And first of all, I wanted maybe to get your insights on the surprise, I guess. I can't be the only one, Andy, because I'm getting calls here of the small fine that was just handed out. We're talking $127 million by the DOJ to the Bank of Nova Scotia. What are you hearing, and what is this about? 127 million? Are you kidding me?
Yes, I can. Do you know what? That is a question that I've been inundated with since last week. And obviously the reason is because given my involvement as a CFTC whistleblower, I mean, it's no secret that the Bank of Nova Scotia is one of the K-Bal banks I testified against. Now, just like you, Shane, these calls, I mean, talking about, this is a wrist slap. Bearing in mind that this 127.4 million that they were fined, I mean, we're talking over the years, the sort of spoofing efforts that were undertaken here. That is a fraction of what this bank would have ever made. What happened is they've reached an apparent settlement with the DOJ last week. But is it? Okay, they were fined this 127 million. For spoofing and also for making false statements to the government. Now that was in addition to the $800,000 spoofing case that was in, I believe, 2018. However, now given the potential damages inflicted against traders, funds, and especially producers who've been forced to hedge positions that they wouldn't have normally had to hedge, and also been the audacity of being rinsed out by the Bank of Nova Scotia's spoofing efforts. So really, this fine, it really looks to be a little more than window dressing, which is really what drew everyone's attention now. But in return for this Bank of Nova Scotia, they've agreed to a deferred wire fraud prosecution agreement with the DOJ. Now that's quite significant, and to hire an independent monitor for 3 years. Now what this does is allow the Bank of Nova Scotia to sidestep criminal charges in exchange for their commitment to abide by the dictates of the DPA agreement, which is it's called the DPA agreement. And that includes financial penalties and remedial measures yet to be determined by a judge. However, it has to be realized that this settlement only deals with the bank's lesser spoofing claims, which are far less serious than the criminal charges surrounding this bank's wire fraud activities. Now, so the question is this over? Absolutely, by no means. And one of the reasons I think it's worthwhile, and this is why we really ought to look at this a little closer, it's worthwhile to look at the DOJ's actions, is because I think wire fraud charges will have to be coordinated with a gold price revaluation. And people say, well, why? Well, because they are massive. This is a huge deal. And as is well known now, there were 6 banks involved in setting the PM fixed prices during the DOJ investigation period. In other words, rigging the fix. Now, what the DOJ is not yet reporting is which of these 6 banks colluded to set the fixed price ahead of the upcoming sessions. Now, what is being determined by the DOJ so far is that JP Morgan, and I use their quote here, as a criminal enterprise. This is a huge, strong statement, and it's put out for a reason. And it foreshadows that far more serious wire fraud charges will be dealt with next. Now, the settlement and this DPA ruling suggests strongly that Scotia has chosen to throw this kingpin manipulator JP Morgan under the bus in exchange for this deal. Now, there's no doubt that JP Morgan is in the crosshairs for price rigging that extends far, far, far beyond spoofing. Otherwise, we'd have seen this settled a long time ago. There's been 3 deferments to actually come up with a ruling. So really, spoofing is just one tool in the toolbox that's used to basically ignite a sell-off to achieve a predetermined agreed price point. That is, in other words, a collusion between several banks who've agreed a price. And this is where the fraud comes in. The only question is how that leaves, for example, HSBC and the other banks charged with wire fraud. One thing for sure is that criminal charges will ensue. Once the DOJ lifts this blankets, billions of dollars of class action suits will commence. There is no stopping. You can't ban class action suits. And there are billions. People will come through, miners will come through, people will come through. Who hasn't lost money in silver, for example, between, say, 2009 and, say, 2011? I think this is or 14, I think this case goes on till. So, but also, what is forgotten, though, is that when the DOJ acts, the gold price suppression mandate will become mainstream. And as with any other commodity or product that's been mispriced, the question will arise as to what the true value is. And there can only be one question. How much higher in price should the gold price be if it hadn't been the subject of collusion and price rigging that between the banks determining the foreign exchange gold dollar cross for multiple years? Because what we're talking about, this isn't just the COMEX. We're talking about the 10 times larger foreign exchange market. Now, the reason we're looking closely at the DOJ footprints and why they have delayed acting despite clear evidence of price rigging is because all the ducks have to be in a row ahead of a price revaluation. And as we pointed out multiple times, and once again, reaffirmed into our liquidity providers meetings yesterday and every day, we have indisputable evidence of strong premiums. And anyone will tell you, anyone who, even if you're a consumer, you're going to see if you can buy silver at spot. You're going to see if you can buy gold at spot. There are physical shortages in both gold and silver, which verifies that this official gaming that we're witnessing right now, where we're seeing the price discounted, it's very limited and wholly dependent on tricking out as much speculator long interest as possible, while these same insiders go long foreign exchange gold and silver in size ahead of this inevitable gold price reset. And we're getting close. And as discussed in our last webinar and in other webinars, it has to be borne in mind that on the other side of this targeted rinse of COMEX speculators, there are delivery obligations accruing in the larger over-the-counter spot gold delivery hopper, which so far could be offset by what has been rinsed. But with stocks testing all-time highs into very risky conditions, fresh risk-on related hedging flows continue to flow into GC and SI. And this makes it difficult to get any real downside traction, although I'm sure people are pulling their hair out that we've retraced at all.
That's amazing. I know there's a lot more to this story we're following very, very carefully, but I want to remind all of our viewers everywhere, wherever you are around the world, when we're talking about gold and silver, we're talking physical, physical, physical. We're not talking about pieces of paper that you wish you could have had or whatever. But I can see, you know, in the last 2 weeks alone since our last chat, Andy, the markets have been kind of volatile. And I know that every day you're into that wholesale market, you're right in there, and the real markets, the real physical markets. Maybe you can provide us with an update on what are you seeing in the physical market?
Yeah, thanks, Shane. I think that's important. Well, really, when you think about it, we're in the midst of the holiday season. And really, when you think about it, conditions are extremely thin. Now, given the counterintuitive paper market selling that recommenced, now that was last week on the 18th, and we saw some on the 12th, and we saw it again on the 18th, footprints point to the Bank of International Settlements, taking advantage of these thin conditions. It's that simple. Aggressively weighing on gold in these thin conditions. And what's it all about? To ensure they cap $2,000 gold ahead of Bank of International Settlements OPEX expiry next week on the 31st of August. However, this is a UK holiday and there will be no benchmark gold or silver fixes, so it's going to be brought forward to the 30th. And OPEX will be settled this Friday on the 28th. Now, okay, so this selling, we've been seeing, it's really 100% related to COMEX-centric, largely coming out of the pit. And you can see that usually on the as you go into the pit open, and it usually starts to fade out when you see the pit close. But under the covers, these sold COMEX positions are offset by the same market making inside of banks, taking the long side of the sucked in shorts in both futures and the much larger foreign exchange gold and silver market. So following really some strategic chart painting, which although bearish on the face of it, is actually quite helpful in the sense that a lot of the speculative fluff that jumped on in the breach, on the original breach of 2000 as we went through, that's been rinsed out. Also in silver, a lot of spec longs, and I'm not talking about people who are interested in taking delivery here. These are highly margin traders that are easy to rinse when they're on the book. You can actually, the banks hold them, the credit accounts, the margin accounts. We talked about this before. And they can see exactly where their pain threshold is. And that's why you sometimes see these spikes lower, because they know that there is a lot of positions that will be bailed. And what will they do? They'll take the long side of everything that is sold. And in silver, it's these guys didn't get on until silver breached 23. But a good deal of these longs were wrong-footed, rinsed out on the 12th of August, which also left very few on board the rally into the 26s, which leaves very little for insiders right now to attempt to rinse out. I mean, obviously, we're seeing that today. We're seeing the attempt at the 26s. What this is a bullish setup. It's got rid of the fluff. Now, I mean, not talking about wholesalers here. As wholesalers, we can't get the bullion. I mean, every ounce of silver or gold that we try and buy is being chased by multiple desks. And at premiums, it is clear that these expectations, I mean, these are premiums that are huge. And furthermore, and as we've said, size of silver is basically January, February, March, and even then restricted in size. And we're talking about wholesale bars. So really what we have here is, as a result of this chart painting, we have a herd mentality expectation that has been groomed, developed, and been encouraged by the mainstream media. And if you listen to them, they're all talking about gold having a big pullback. They're saying that gold can be bought cheaper. Now, as I say, this has been widely disseminated, suggesting that if one just simply stands aside or sold your longs, you could add your holdings at a much cheaper price. Now, as I say, as wholesalers, we know this is absolute claptrap. This is precisely the condition that is going to drive gold higher, but as is always the case, it leaves as much speculative money on the sidelines, or worse, if they're being foolish enough to short, wrong-footed. Now, this is a perfect setup for insiders to ride the rally into 2,000 gold and 28 silver with the least speculators on board. Now, and really, only when gold and silver breach these heavily shorted levels will this wrong-footed sideline money get on board. So what we're saying is, look, the easy money's been made by insiders, and there is scant, fair, fresh, easy, long money to rinse between, say, if you want levels, between 1874.20 and 1920, which is being attempted today. And really, there's very little below that. And in SI, between 23,580 and 26. Really very little. It's really at this point here, we're seeing any additional supply is coming in from speculators with the insiders on the long side. And so in other words, the opposite is true. This is not bearish. The only supply evident into extremely tight physical conditions is tricked in wrong-footed specs. And they're short selling of GC and SA while these market-making insiders are 1-to-1 long against them. You can see that partly in the COT report, but the whole picture isn't there because you have to also weigh in the over-the-counter market. So bottom line, specs have been wrong-footed, likely to the extremes of this envelope this past week. And given the spot market footprints and very strong physical interest and premiums reported, insiders have been seeking to cover off all the residual shorts they can while positioning for a significant rally next week when nobody expects it. So options expiry will serve, which is tomorrow in COMEX, this is probably going to be published on either Wednesday or Thursday. So we're doing this on Tuesday, but OPEX will be, what it's going to do is serve to restrain what is a fundamentally driven move through spot gold 2000, but with options resistance wavering, gold is coiling for a very large move higher. So structurally, I'd say there's no damage done this week. In fact, the weekly and monthly charts look bullish. GC has tested its old 2011 highs and keeps finding strong interest there. And with everything intact for the Goldman Sachs 2300 target, which we talked about, gosh, several months ago, like I think in January, it's going to be tested. And then 2500 comes into the crosshairs. Goldman doesn't get these things wrong. Now, once we get into September, gold season, and I always look at September the 1st as like January the 1st. It is gold season. That's when the Indian market comes into being. And really it is, as I say, people come out of a sleepy summer and they look now to invest. And there'll be a lot of competitive buyers in this market while we're already very tight. So this is a last kick at the can to unload and to wrong foot as many people, unload shorts and wrong foot as many people as possible. And then the next leg of the rally will commence. And what is absolutely clear is that a gold price revaluation is required by all central banks. This is the only way to ultimately balance the books. It's just a matter of timing. I would watch what the DOJ do next. And that's why I just spent some time on that. And when do they come out and actually talk about these wire fraud charges and place charges? Because I think at that point, officials will have to be ready to be positioned long and strong foreign exchange gold.
Well, Andy, it seems to me that it's almost like a magic trick. In one hand, they're going to try to push the price down, and at the same time, they're buying as much as they can in preparation for what they know is going to come. Now, a couple of weeks ago, and just now, you mentioned again at the very beginning here, you mentioned the Bank of International Settlements, or the BIS. And last week, I remember we talked about that you were kind of breaking some major news. Can you give us an update on what's happening on that front?
Yeah, I can give you an update on that. And last time we, as you say, a couple of weeks ago, we looked at that. But really, this is what we're seeing. And this is, again, put the wholesale hat on. This is what we're seeing. As we move into the over-the-counter options expiry on Friday, we're evidencing an extremely unusual situation. Now, it's an unprecedented situation. We're actually evidencing the BIS having accrued an extremely large, long, unallocated foreign exchange gold position. And market-making insiders, i.e. the bullion banks that are emulating the BIS, are getting on the right side of foreign exchange gold ahead of this inevitable gold price revaluation. Now, we've been repeatedly drawn attention to the only mechanism to revalue gold. It must be squared in the foreign exchange markets. And we talked about this last time and the reasons that it can only be done in the foreign exchange market. And this is exactly where we are headed now. And the trigger point still suggests the lines cross at this optimum $2,500 spot gold and $35 in spot silver, which we raised that target last time from 32 to 35. And those, I'm talking about current assessments. So really, to sum things up, what we're currently witnessing is a carefully constructed medium-term insider setup to take full control of an impossible to avoid upside gold price revaluation. What this tells us is there's confluencing reports from two separate first-tier bullion bank desks, and I'm talking about senior first-tier bullion bank desks, that the BIS has, quote, and both of them say the same, quote, never has the BIS been so long unallocated gold. And what they mean by this is that they are long, of course, foreign exchange gold, essentially bullishly spot indexed while providing physical, which is desperately short in supply, to the agent banks so they can scramble to meet delivery demands, even on a fractional basis. I'm talking about GLD and SLV. And as far as 1,000-ounce silver bars are concerned, they are all headed into the COMEX to back up what looks like a raid on COMEX silver upcoming. Because where the hell else can you get silver in wholesale bars? You cannot. And I think this is going to be a very serious change in behavior for silver, because it's an unusual for the COMEX to be a delivery market, but it's the only source of 1,000-ounce bars. Now, so given the unprecedented tight gold bullion conditions we're experiencing, we're all struggling to get any supply at all. So officially supplied physical will imminently run out. I'm talking about gold here. And with less bullion available, the offer to sell bullion will ultimately rise enough to trigger the reset trigger. It will happen. These are the footprints. And it's the footprints that the wrong-footed specs are missing. So really, and we're looking very quickly silver, because I know everyone wants to talk about silver. September silver goes into rollover into December, which is where already the open interest and liquidity already resides. So December is the 1 month where both GC and SI, gold and silver options, expire together, and it's the largest delivery month of the year. And what I can tell you is, although we see the option sweet spot in silver, and we're grossly under that price today at 27,245, it closes down it. What we're seeing in December is 29,245, and that's just for openness.
Wow. Well, Andy, I got to tell you, on a personal note, I have a bunch of friends that went into the Kinesis mint. They started minting silver. We're talking about silver mainly on this call, but they're very, very excited about what's happening. They're very excited about what's happening in the market. Now they're really paying attention. So I know they're all going to be watching this call. Everyone's wondering what's happening. It's been really valuable. But one of the things that a few of them have said is, and I challenged them, I said, go anywhere in the world, any website, any dealer, anywhere in the world. And I'm talking about physical gold or even physical silver, and let me know what you can look at the spot price, and then go ahead and try and buy 1 ounce of gold or a gram of gold or 1 ounce of silver. And they came back to me, they can't believe that there's nothing even close in terms of, and maybe you can go over with our viewers here and those that are just getting started. How is it possible that we can get our prices so close to the actual spot market?
Yeah, and of course this is to do with again ensuring that you have you're dealing with somebody like Kinesis, who of course Kinesis is the source for this, where you can actually access the wholesale market. If you're only buying a gram, it doesn't matter, because what it is part of a wholesale ecosystem where you can actually take a fraction of that and still have it titled to you and bring it into your name. So, but really, I mean, this is obviously that determines these impossible to beat prices. But really, when we have to look about it, unlike, when you look at the bigger picture here, unlike other commodities trading on the COMEX, because people tend to think of gold as a COMEX item. It's not. It's traded much larger size as a foreign exchange cross, which is freely convertible into all other foreign exchange currencies. So when we see the price of gold apparently rise, what we're actually evidencing is the US dollar falling against gold alongside the entire basket of all other fiat currencies. So exchanging these competitively debasing fiat currencies for gold is clearly the best option to preserve your wealth from any further debasement. So, and this is what I'm leading to. It's completely agreed that physical gold titled to you and securely stored outside the banking system is the only way to sidestep the counterparty risk. Now, exchange, we talked about this before, exchange traded funds do not give you title to gold, merely or silver, merely a claim on the counterparties who manage the ETFs. And the same thing when you buy unallocated gold. You're not the owner of the gold. It sits on the balance sheet of the bank, much like when you deposit cash into a bank. Your deposit is little more than a load to the bank. So really, what are your options? Clearly, the object is to divest as much of one's depreciating fiat currencies and to invest the proceeds into physical gold and silver. But in the process, having eliminated one counterparty risk to ensure you eliminate all and other new counterparty risks. Now, currently, your gold must be easy to access and seamlessly transact with. However, the process of exchanging physical bars or smaller coins is, as Shane said, very costly, time-consuming, cumbersome. So really, a better solution had to be sought. So also, to ensure the least price friction when having to buy or redeem gold for everyday use as a currency, it's best to buy and sell your gold in the liquid wholesale market. This is not a facility that is available to the public, nor is it easy to use physical gold for small transactions such as buying groceries or paying utility bills and the like. So with the advent of blockchain technology, the solution is to digitalize your gold into small enough units to use as an everyday currency. Essentially, your gold can be converted into a redeemable e-payment currency. And to do this, your titled gold must be placed onto the blockchain rails in your name, insured, and never sit on the balance sheet of any other institution. Now, once securely digitalized, you'll be able to spend, save, and hold that gold in its ultimate liquid form. So this is where Kinesis comes in. And thanks for bringing that up, Shane. Kinesis provides all the security required to trust your gold. It's always titled and accessible to you, but enable you to exchange your gold currency for any other currency or back to physical bullion in an instant. Furthermore, and unlike any other e-payment offering, Kinesis enables you to become your own central bank. And this is where it gets interesting. We've just described how to escape a broken banking system and to sidestep competitively depreciating fiat currencies. However, unlike any other gold market e-payment offering, Kinesis includes you to become an integral part of the Kinesis monetary ecosystem. Essentially, you share in the transaction fees that enable all currencies to flow, and they're shared back to you. And this is done completely transparency. And I would really encourage you to look out for our new How to Mint videos to explain more. Now, Shane, didn't we not talk about this last time?
Absolutely, and you got me all fired up now, Andy. If you're brand new to Kinesis or just finding out about Kinesis, I want you to go back and listen to that one over and over and over. And what I'm most excited about, because you explained something that no other platform, no other facility in the world can claim, can do. And on top of that, last time we talked about that you were just going in, or you're going to go into a recording, not a studio, but more of a movie production studio to bring some updates on what minting is and so on. Can you give us a little bit of an update on how that went, or what people can expect?
Yeah, I think that's really exciting. I think one of the things, it's always best, like a picture is always worth 1,000 words. And I think what we do is sort of, furthermore, firstly, as a director of Kinesis, I want to put my name behind the fact that I believe in minting. I believe in the currency. I believe in the fact that it's physical and that it's in your name. I trust this completely, the insurances and everything in place. That's why I actually went ahead and put my face in there. And I think what we did also was we went through the actual simple process of minting. And it always seems, when one hasn't done something before, it's always difficult. And I think, so what we did was we put them into a couple of tiny little short videos, and I think, and plus an explanation of where to click, how to do it, and how you can do this over and over, and literally how much money you can make. And obviously, price of gold goes up and down. but timing is everything. And I think so. We will also assist with the timing of these entries and exits as we move down the road. So it's just the first step. The minting videos are really worth a look.
I am so excited about those videos to come out. Really, really excited for people too that are just learning. Now, in the meantime, if you're new to Kinesis, go to kinesis.money. Also, please like this video and share this video to anyone you know who is interested in gold or silver or just protecting their own wealth, their own money. But go to kinesis.money. And if you go to the support link, look down and you'll be able to see something that says video lessons. Okay, video lessons. They're available right now. There's 11 of them that you can go through. They're very short. And I know that the minting portion that Andy just did, again, I'm excited because nowhere on the planet can anyone else, put together what Kinesis has just done. And so with that, it's been a great call, Andy. Let's wrap it up. I'm looking forward to next 2 weeks, because I know there's going to be a lot of developments in the next 2 weeks, and I look forward to catching up with you again.
Shane, it's always a blast. I really look forward to it.
All right, everyone. You've been listening to Andy Maguire, the one and only, and we're here live from the vault. My name is Shane Moran, and we'll see you again next time. Bye for now.